How do you view the market reaction to tariffs, something that are within the administration's control?
Well, at least from my standpoint, I wouldn't attribute the market reaction singly to tariffs, because when I've been in meetings here for the last 48 hours at CERAWeek, and you take a look at the CapEx budgets of everybody that's here, there's for sure a $500 billion, maybe close to $1 trillion between the sovereign wealth funds, the private equity, all the big tech companies are here. This is an energy conference. They weren't even coming here 3 years ago. Now they're coming here with the big five, with the largest CapEx budgets collectively, bigger than autos, bigger than manufacturing, bigger than oil and gas.
Are those at risk, though, Mr. Secretary?
I don't think they're at risk at all, because there's there's real demand that's occurring separate from any uncertainty there might be in the markets around AI, and that we're in an AI arms race with China that we must win. That requires electricity, that requires data centers, that requires more power generation. That AI has got an opportunity to affect every job, every company, every industry, lift up humanity in ways that we could, just like software has lifted up humanity for the last 30 or 40 years. So that the excitement that is here at this conference, and people are bullish on America. Yeah. They see that there's a renaissance that's occurring in our country. We're bringing back manufacturing. We're going to be back in the mining business. We're going to be back in the manufacturing business. I mean, the enthusiasm here is palpable.
Have you met? You're a former tech, Great Plains Software, sold it to Microsoft. So you're a tech guy, sort of in your core venture capital fund. Amazon is here, Microsoft is here, Google is here, others are here. I'm sure you've talked to some or all of them. Any indication to you, Mr. Secretary, that their capital spending budgets are going to go down or be cut?
No, because I'll tell you why. If you've got a $3 trillion market cap, that's dependent on you delivering against the expectations that you're going to be able to deliver AI, and you can't deliver AI without electricity. These are companies that in the old days didn't have a CapEx budget. They hired salespeople and software developers. They expensed everything on the operating side of the business. But now the capital required for power generation, for data centers at a scale that we've never seen before, that's not stopping. And it's not stopping in China either. China's got 30 nuclear plants under construction. They've added 100 gigawatts of coal. They're spending over $100 billion on hydro. That's the real signal, and that's the war that we're in. The cyber war and the AI arms race against China. That's going to continue to drive demand.
Heavily polluting as well, these coal plants. The United States, I know a lot of people out there, they're going to hate mining no matter what we say about it. I think the U.S., at least from the data, does things a little bit better or better than any other country.
So much better. And a coal plant in China is like a 1970s before we even had an EPA. In the U.S., if there's a coal plant still operating in the United States, they've taken care of everything that you can imagine. These are clean coal plants if they're still running. They've been the most regulated segment of our energy industry. I applaud them if they're still open, and we need them to stay open, provide that much needed baseload.